Hello and welcome back to Explain the Charts. Today, on September 26, 2025, we're doing a deep dive into one of the most talked about stocks on the planet, Apple, ticker symbol Apple. There has been a whirlwind of news lately, and the chart is showing some incredibly powerful moves, so we're going to break down both the headlines and the technicals to see where Apple might be heading next. First, let's talk about the news, which has been overwhelmingly positive. The primary driver is the stellar launch of the new iPhone 17 lineup. Reports from multiple sources indicate strong early demand, with shipping times for the new models extending significantly longer than last year's iPhone 16. This is especially true in key markets like China, where record pre-orders are helping to squash fears about competition. This has led analysts to become extremely bullish. Wedbush, for example, raised their price target from $270 all the way up to $310, citing what they call a pent-up consumer upgrade cycle. They estimate hundreds of millions of users are on iPhones that are 4 years or older, priming the pump for a potential supercycle of sales. Furthermore, analysts are beginning to talk about an AI premium that isn't yet priced into the stock. They believe Apple's AI monetization strategy could add another $75 to $100 per share in value over the next few years. Thanks to this wave of positive news, Apple's stock surged over the past week, erasing all its losses for 2025 and finally turning positive for the year. Now, let's see how this incredible news story is reflected in the price action on our daily chart. Looking at the big picture on the daily chart, we can see a clear and powerful uptrend that has been in place for most of the year, starting from the lows back in April around the $170 mark. The stock has been making a series of higher highs and higher lows, which is the classic definition of a healthy bull trend. What's fascinating is how closely the recent price action correlates with the news cycle we just discussed. You can see this sharp pullback that began right around September 9th, which was the date of the iPhone 17 reveal event. Initially, reports said Wall Street was underwhelmed, and the stock sold off from around $240 down to a key support level near $226. But then, look at this explosive move that began on September 19th and accelerated dramatically on the 22nd. This is the market reacting to the positive pre-order data and the bullish analyst reports. That move was confirmed with massive volume, which you can see on the volume bars at the bottom, telling us there was strong conviction behind the buying. This surge pushed the price right back up to its all-time highs, near the $257 to $260 resistance zone. It's currently consolidating just below that key level after the huge run-up. Let's zoom in on this recent period to get a clearer view of this reversal. Here on the daily chart, filtered from the beginning of September, you can see the narrative play out perfectly. We have the sell-off on the initial news, followed by a brief period of indecision where the stock found its footing right at that $226 support level. Then, the reversal and breakout was incredibly powerful, gapping up and running nearly 15% in just a couple of sessions. This move decisively broke through the previous resistance area around $245, which should now be considered a potential support level on any pullback. The price is now digesting this massive gain, which is healthy behavior before a potential attempt at new all-time highs. Now, let's switch to the 1-hour chart to analyze this current consolidation in more detail. Looking at the price action since the big gap up on September 22nd, we can draw a very clear short-term range. The resistance is clustered around the $257 level, which the stock has tested and failed to break through several times in the past few days. Support for this range has formed near the $252 level. This creates a tight, approximately $5 channel where the stock is currently trading sideways. This is a classic coiling pattern where energy is being built up for the next directional move. Traders are watching this range intently, as a break in either direction could signal the start of the next short-term trend. Drilling down even further to the 15-minute chart, we can see the choppy, sideways action within this consolidation zone even more clearly. For day traders, this presents opportunities to trade the range between $252 and $257. However, for most, this chart simply confirms that we are in a holding pattern, waiting for a catalyst or a significant increase in volume to force a breakout. The key takeaway from the shorter timeframes is to wait for a decisive move outside of this established range before committing to a new position. Okay, let's switch back to the daily chart to recap and discuss what to look for going forward. To summarize, the fundamental story for Apple is incredibly strong right now, providing a powerful tailwind for the stock. The technical picture shows a confirmed uptrend that is currently pausing at all-time highs. Let's outline the most important price levels. Key resistance is the all-time high zone between $257 and $260. A sustained break above this area on high volume would put the stock in price discovery mode, with analyst targets of $270 and even $310 coming into focus. On the downside, immediate support lies at the bottom of the current range, around $252. Below that, the next significant support is the prior breakout point around $245. The most critical support level to hold to maintain the current bullish structure is the pre-surge low, right around $226. So, what are the potential scenarios? The bullish case, which I believe has a high probability of around 70% given the news flow, is that this consolidation is simply a pause before the next leg higher. A daily close above $257 would be the trigger to watch for, signaling a continuation of the uptrend. The bearish case, with a lower probability of 30%, would involve a failure at this resistance level. This could be triggered by profit-taking or any negative news regarding sales or production. The first warning sign would be a close below $252, which could lead to a test of the $245 support level. Ultimately, traders should watch the $252 to $257 range for the market's next signal. Thank you for watching this analysis on Explain the Charts. Remember to do your own research, and we'll see you in the next video.